Good morning, ladies and gentlemen. Thank you for the introduction. My name, as you heard, is Richard Cutcher, editor of Captive Review magazine. It is my honour to be with you all today, and my pleasure to visit Kuala Lumpur for the first time ever, actually. So thank you to Labuan IBFC for the invite. As you've already heard this morning, Labuan IBFC and Captive Review joined forces to conduct a new research project for the first time called Attitudes Towards Captive Insurance in Asia. Of course, our friends here from the IBFC have a strong interest in this subject as they look to position themselves as the #1 domicile in the region. But also for us at Captive Review, it is our job to be in touch with the market, the captive insurance market, whether it's in North America, Europe, Asia, Latin America and beyond. And we want to closely monitor these attitudes and learn how we can best serve the risk and insurance community in regards to captives in the future. I don't believe that the findings from the survey has produced many great surprises, and I think that's probably a good thing. But it does provide valuable insight into some of the moving opinions that are driving or holding back captive utilisation in the region. But before I discuss these findings in greater detail, I'd just like to give some context, some kind of global context on the captive market, just so you can understand exactly where Asia currently is at when it comes to growth and uptake. So every year at Captive Review, at the start of every year, we contact all the domiciles around the world, and there's a lot of them now. I think there's about 55 captive domiciles included in our research. And we asked them for the most up-to-date figures of how many captives they have active in their domicile. So at the end of 2016, so at 31 December 2016, we believe there are 6,618 captives domiciled around the world. Now, almost half of those, or pretty much exactly half of those, come from North America. So when we say North America, we mean United States and Canada. Canada only contributes about 10 of those, so it's the United States. Bermuda and the Caribbean, 37%. Europe, 13%. And then down there at the bottom there, Asia Pacific, 2%. Now, when I say Asia Pacific, the domiciles I'm referring to are, or the places where captives are housed in this region are China, the Cook Islands, Hong Kong, Labuan, Micronesia, New Zealand, Singapore, and Vanuatu. Just a note on that discrepancy between North America and Europe. Obviously, North America and Europe are definitely the most mature kind of economic regions for captives. The reason you've got such a big difference there, one of the reasons there's such a big difference between North America and Europe is North America, as was discussed a second ago, there's lots of uptake of captives, very, very, very small companies, some more interesting tax advantages, which we won't talk about today, and are quite controversial. Whereas Europe, those 841, they're all going to be, almost all of them are going to be very, very big captives owned by the biggest companies in the world. So of those only 840 in Europe, they are big insurance companies. And then just to give you an idea of the growth in the last, in 2016 in the market, there were 616 new captives licensed during 2016. And you can see a very large proportion, again, 78% was from North America. And again, that was really driven by these much smaller captives, which is not the kind of captives we tend to talk about because they are very, very small vehicles and quite controversial. Europe, only 22 new captives, 4% of the captives. Bermuda and the Caribbean, 18%, and there was just 8 new captives domiciled in the Asia region during 2016. I can just give you the information on where those 8 went. So of those 8 domiciled in Asia during 2016, 3 were in Singapore, 2 were in Labuan, 2 were in the Cook Islands, and 1 was in Micronesia. One important point to make about these statistics is we do not include cells or individual cells in these statistics. There is an ongoing debate as to whether cells within a cell company should be included in the captive count. I have an opinion on that, but that's not too important. The reason we don't include the count of cells is because not every jurisdiction is able to give us a number. So Bermuda, for example, we believe is between 12,000 116,000 cells in Bermuda. Even the Bermuda regulator doesn't know how many. It's not that they won't tell us, they can't tell us. They don't keep that record. So if we were to try and count cells, it'll be very inaccurate. So unfortunately, we just don't bother. We keep a track record of those domiciles that do give us the numbers, but they're few and far between, unfortunately. So on the survey itself, who took part? So there were 112 responses from the survey. We targeted the risk and insurance management community in this region. The vast majority of those were either captive managers or captive owners. 22% worked for an insurance company of some kind, either a reinsurer or insurer. And then we also had representatives from brokers, lawyers, actuaries, accountants, excuse me, and a small number of prospective captive owners, those considering a captive as well. So we really tried to get a cross-section of the whole captive community, or those who are serving the captive community. In terms of the knowledge base, or the knowledge base they said they had, 29% of respondents said they were experts. They had an expert knowledge of captive insurance, while 46% were familiar, and just a quarter said they were novice. So again, we had quite a good knowledge base from those that we surveyed, but some people who are relatively new to captive insurance as well. So I'm going to run through a couple of these key findings. Before we introduce our panel, I'm going to run through some key findings, not in any great detail, but just to give you a flavour of what we're going to discuss when our panel come up in a moment. So one of the recurring themes of the survey, and one that I've certainly heard from visiting the region and talking to the captive community here over the last few years, is kind of tackling the internal procedures of a company in the region. So you might be able to convince the risk manager that a captive is a good idea, and the risk manager might think this is a great project for the company and great project for them, but then he or she has then got to get that signed off by finance, by treasury, by legal, by the CEO, and that's when things can start getting a bit difficult. So a lack of commitment from internal decision makers is holding back captive utilisation in Asia. Again, and this is something we've touched on in some of the earlier comments as well, there seems to be a common perception that captives are only suited to the largest companies. This has been a natural evolution of captives in the past. So if you go back to the 70s in North America and in Europe, it was the biggest companies in those regions that formed captives first, or often was. I think there's some people think, well, that doesn't necessarily need to be the case in Asia. Surely we've learned that lesson already. We know that captives can be used for middle market companies as well. But certainly there is a perception amongst in the region that captives are only suitable or should only be considered for the largest companies. Okay, tax, which we've been talked about already from the governor of the Bank of Malaysia here. So there is still a common misconception that captives are a pure tax play. I think it's fair to say that there can be some tax advantages for a captive, but the idea that that's the only reason you should form a captive, or that's the main reason you should form a captive, I think that hopefully on our panel we'll discuss why that isn't the case. But there certainly is a misconception among the risk and insurance management community that captives are a pure tax play, and we're going to discuss that in quite a bit of detail shortly. Okay, and so this is some of the more positive sides of the survey. So in terms of what's driving captive uptake, why are people starting to become interested in captives in Asia? A maturing risk management culture. That, of course, would make sense when you've got a very quickly developing economy. And also, and this is what I find most interesting, is the idea that risk and insurance managers are starting to consider captives or think about captives in response to struggling to find coverage for their unique risk portfolio. So they might have some emerging risks, or they might have risks which they're not happy with the insurance market, the traditional market aren't responding to, and they're turning to more of a self-insurance model or self-insurance ideas to address those. So I think that I believe is a sign of the maturing risk management culture here. And then lastly, we're going to drill down into this a bit further at the end of our discussion, but yes, 90% of respondents said they expected growth in a number of captives domiciled in Asia. I think if we were to go back to those first slides in terms of the numbers of captives domiciled here, I think we can all agree there's lots of room for growth, whether that's through brand new companies forming brand new captives, or through maybe the repatriation of captives, Asian captives, which are domiciled maybe in Vermont or Bermuda or other, or Guernsey or other international domiciles. I think there's plenty of opportunity for Singapore, Labuan, and other captive domiciles in the region to start kind of making some big wins in that area. So I think with that, I'd like us to introduce our panel.